Happy Monday, everyone. Welcome back to the market, and I hope everyone had a spectacular weekend. All right, so what we're looking at for Bitcoin today is on Friday we had the CrowdStrike hacking occur, which gave us a massive impulse on Friday, which we were thinking that we were going to reach this protected high, come back down, retest before we moved up into higher prices. But as everyone's scared out of the markets, out of the traditional markets, the S&P 500, we'll pull that up quickly. The S&P 500 shed on Friday. It was already into 2 days down already, but we had a third day down, closing the lowest it's been since the 3rd of July, so almost wiping out almost all of July's gains. So with that in mind for this week, let's have a look at what we're doing and what we can perceive for Bitcoin for today, really. Alright, so I still have the bias that we are still going to move towards higher prices. But if the larger markets are moving into a little bit of a retracement, then Bitcoin can't escape the gravitational pull of those things. So let's just wipe this out. We'll just do a little bit of a cleanup. While we're here, let's notice that this retracement back from the almost all-time high, so this impulse down, we have rallied up to and is sitting on the 786 retracement. So we've retraced 78.6% of that move, which is a deep rally, and without a real pullback. So we are still due for some sort of move that will we are still due for a move that will have to just tidy up and mitigate a little bit of these orders, just like this impulse here. Just as this impulse here tidied up, has tidied up all the stop orders through here. So the market has balanced itself since the 12th of June. So we're pretty much in the same sort of market. So we've cleaned out everything that was there. And so while we're on the daily, we still have this context of fast moves up, fast moves down. We have moved up. We did a quick consolidation at the 61.8 level, moved up to the 78.6 level. Our protected high is null and void on the lower term time frame, so let's tidy that up. So from this context, we can see that this is our protected low that we're looking at moving towards higher prices, and let's just put that there. And so what we're looking for is minor pullbacks to move up higher, but also bearing in mind in the longer term time frame, in the short term time frame we're looking at moving up. The mid-term time frame, which we're talking sort of days, so hourly we're looking at moving up. On the week or so we're looking at moving down, and on the monthly we're looking at moving up. So that sounds pretty confusing, but we know that we're moving in different areas. Alright, so moving forward from the daily, we are considering that we could either, just to make everything totally confusing, that we could come down here, retest, and move up to higher prices, or we could be coming up to test here, sweep liquidity, and then move down. So they're the two actions that I'm preparing for in the context that price moves up and down all the time. And so let's just do a sweep of our chart, get rid of all the liquidity wicks that no longer serve us. Those two were swept. Alright, perfect. So now down here we've got the one that started the whole day off. Oh, actually, sorry. Yeah, started the morning off, so before the market opened. This is when Joe Biden actually announced his retirement. So that was a real moment for the market that everyone wasn't ready for, but had made the move where the price moved from 3 o'clock on Sunday time as low as a 2.6% move, all in 2 hours, and retraced. So that would have looked devastating had we been down here and looked at it at about 4:30. 3:30. No, 4:30. Sorry, my bad. My apologies. So that's just been a real liquidity sweep because the weekend was so quiet. It was in such a tight range that the whole weekend moved from the low of 66,000 to as high as 67,500, which is 2%. So it moved 2% up and down at its widest points, and this simply swept the market to take the liquidity to move higher. So from there, with that context as to why those two little candles before, we always keep the second wick from the low, which is often the second most move, where price will come down to sweep to move higher. So within this price direction, I would anticipate it to either move up to there or down to here to go higher. There we go. But should price fall below this, then it's just going to carry on down through these wicks. So I'm okay with those directions. So I'll be putting a buy limit here, and then if price comes further down, and then I will look at potentially putting more buy limits through here. We've got these levels across here, which don't need both of them. So we've got this buy level here, which is where price broke through, came and liquidity grab, so it's almost mitigated, but I'll keep it there as a level. And this is a little bit more significant because it is closer to the 618 a retracement level, and that can actually flip to support. So that may be an area, although it doesn't show structurally on the rally, it does show a little bit of support for price to fall back on to bounce, the price to come down, rest on this level at 65,100, and then move higher. So they will be my two buy wicks that I will look at price coming down to. And then as far as up here, that one has been wicked. I've got another liquidity grab wick, liquidity wick. Let's just change that because I've changed my my template to liquidity wick. and then I've got liquidity wicks up here, and there's quite a lot of congestion up here. So once we start to hit the 69,800, things are going to get really, really resistful. We're going to enter some resistance. So that sort of space is definitely going to be an area to look for shorts up here. But we've still got 3% before we get to there, and we've got 3% at that wick. So we're essentially sitting right in the middle from this resistance level, this liquidity wick of support, and that's where we can go. So as we move up, I'll start dollar cost averaging in my short orders, and as we move down, I'm going to dollar cost average in my longs. Very small leverage, just 2 to 1, and just see how that plays out from there. And then that way I can buy in as price moves up, because I still have, if price moves up, I still have the anticipation that we are going to come down to this 64,000 level and take out this imbalance through here, because this on a daily, there is quite a lot of imbalance in there. So let's just quickly move out onto the daily and see how close I got. So as far as the daily goes, we've got that level of imbalance, which means there's support below, which obviously comes from that wick. But if we move down into the hourly, back down to where we were, we can see that on a lower time frame level, there's also this area here from this wick up to there, which shows that there's going to be a little bit of imbalance below as well. So that's something that we will both keep in mind for both those areas. And I'll remove that just to keep the chart cleaner. Alright, so basically going to look for longs, and then dollar cost average in as the price may come down and then move up. But then if we end up moving up to reach this liquidity wick, then I'm going to start dollar cost averaging into my shorts. I'm already into a little bit of a short level from here, and I've just taken out, I entered a short from here, and then I took out a short from here, and then when those wicks that we came through here, there was a short from this area as well. So I'm 3 levels in, but everything is traveling fine and looking like the bias may still turn out to take out this liquidity low, and it's all in the context of price moving in a wave. Price will always go from peak to trough. Alright, thanks for tuning in. See you tomorrow. Bye.